is Mark Anthony with Mercury Time Price Analytics, and this is our weekly video update. The theme for today is triple threat. This video is being recorded on Sunday, January 12th, and we're going to talk about the week past and what to expect for the coming week. Now, you can read the blog article, Triple Threat, on our website, mercurysignals.com, mercurysignals.com. Just click blog in the top menu item, and then you can read the entire article. Today on the video, I'm going to provide some additional insights as well. So Thursday evening Globex, early Friday morning Globex, ES hit another all-time high at 32.87. Is this the all-time high? Who knows? It could be. We'll see. We're not interested in picking tops and bottoms. We're interested in trading. So it really doesn't matter whether it is or it isn't. But there's some interesting things in terms of just how overbought this market is right now. One of the methodologies we use that we provide to our subscribers are called Mercury bands. These are multi-day, multi-week, long cycle look back, and the level at which we're trading right now is so extended, it's beyond our normal Mercury bands, and it's trading into these upper extensions. And to give you an idea what we mean in terms of the Mercury bands, every evening at RTH close, we take the data for that trading day and we put it into our algorithm, and it gives us these Mercury bands for the next day. Now, the core of the Mercury band system is you've got an upper band, a lower band, and two mid bands. So if you think of it as a metaphor like Bollinger Bands, same type of metaphor, completely different methodology, but the metaphor is the same. You've got an upper band, a lower band, and instead of a mid band like you see in a Bollinger Band, you have two mid bands. It also gives us two upper extensions, two lower extensions, and at times a third upper or lower extension. Now, these Mercury bands are normally right in the middle of the day's trading range. What we saw on Friday is the first time in recent memory where ES didn't even sniff, didn't even come close to trading into the area where these regular Mercury bands were, spent the entire trading session trading in these upper extensions. So let's take a look at that. Right before the European Open, this is about 2 o'clock Eastern Time, U.S., an hour before the European Open at 3 a.m. U.S. Eastern Time. I posted this chart on Twitter. This cyan line here is a algorithmic time price regression line. Every other vertical line that's on, or I'm sorry, every other horizontal line that's on here is an algorithmic pivot. And we use these as what we call profit capture pivots. So if we're long and price is going up into these pivots, you use them to take profits. If the system is short and it's going down into these pivots, you use it to take profits on your short. The only time we ever put angled lines on here is when it's an algorithmic regression line. And the purpose of these regression lines isn't to define channel support and resistance, but rather it is to cut through or bisect price. And when you get extended, like we are up here, these algo regression lines become very binary. And we're going to see an example of that in just a minute. But the reason I posted this an hour before the European Open, 2 a.m. on Friday the 10th, is because I saw this regression line coming in at the same price is upper extension number 3. Upper extension number 3 is up here at 32.81. Upper extension number 2 is looks like 32.69. Upper extension number 1 is 32.57. So again, it's rare for our algo to even provide a third upper extension. Now, what normally happens since mid-November with all the liquidity that's been pumped into the market, QE, not QE, who cares? But the point is, if the market finishes anywhere near the high in RTH, then it drifts up into these upper extensions, into the first one, sometimes the second one, extremely rarely does it get up into the third one? Again, to give you an idea, the Mercury bands themselves, the upper Mercury band, the heart of these Mercury bands, the top of it's down here at 32.45 for Friday. Now that's going to adjust upward. For Sunday, it's going to be around 32.57. But it didn't even come anywhere close to these bands. So that's how extended we are. Third upper extension. These aren't based on standard deviations, but if I had to guess, it's probably close to a third standard deviation. But that's how extended we are. And these algos aren't standard deviations. They're an algorithm of time and price. And if you've seen any of our other videos, they're heavily weighted on time. Because you have to do that in order to be accurate. But you can see what happened in here. Here you have 2 a.m. Friday morning, right before the European Open, and we've got this third upper extension coming in here at 32.81, and we've got the algo regression line coming in at the same spot. Is that a coincidence? Sure, it could be, but there's too much going on right here, as you'll see in a minute, for this to be a coincidence. So getting back to the original question, is this 32.87 the top? Who knows? But the math is lining up in favor of it being a top of some significance. Whether that means a couple days, a week, who knows? But it is lining up to be a top of some significance. So if we zoom back out, take a look at another chart. Here's the regular Mercury bands, and on the lower band 32.21, the upper band 32.45, completely trading out of the trading range. So we had the Friday Open, and let's go back to our chart here. And a couple hours before the RTH Open in the U.S., we started to move down a little bit. We had the non-farm payroll report at 8:30, and our proprietary algo triggered a short right in here a little bit after 8 o'clock at 32.82, 83, even before the non-farm payroll report came out. So the system got short 32.82, 32.83, and it stayed in the short all day long. The day was trend down, although I must say it was orderly. There wasn't anything sloppy about it. There wasn't much of a bid here for most of the afternoon, but there wasn't anything sloppy or exaggerated. It was just a slow dribble down. Now, here's the point. You had the high 32.87. You had the low 32.60.75, I believe. So you're down 26 handles off the overnight Globex high, and still haven't even gotten down into what was the first upper extension for the day. Now, it's interesting that this upper extension on Friday was 32.57. When I've already done the Mercury bands for tonight, and the upper one's going to come in right in here at 32.57, a little bit lower. It's going to come in right in here. Same spot as where this upper extension was on Friday. And of course, these upper extensions will get adjusted as well. So this action here implies at some point during Globex Sunday night, regular trading session Monday, we should at least get down to that 32.57, which will be the upper Mercury band. Now, the reason I titled this Triple Threat is you got a couple issues here. Number one, you've got a break of this algo time price regression line. And this goes way back to one of the very important lows, May-June area. I can't pull this chart all the way back that far, but breaking this line is significant. Now, what happens quite often with these regression lines, this price will come back up and test it. But remember, this is angling up. So the longer it takes for ES to come back up and test it, the farther it's going to have to move. So the bulls have that working against them. But what's important about this, and again, I always say time is more important than price. I want you to notice what happened here at this 32.82. Remember, at 32.81.39, you've got this third upper extension. You've got our proprietary algorithm, which is incredibly accurate, getting short right at the same price, 32.82. There's too much going on right there to be coincidence. Then you've got this white line, which is a very, very slow-moving algo. It peaks at the same price. Triple threat, 32.82. And you also look at the cyan line, which is our proprietary momentum indicator. This is not a moving average. This is a time price momentum algorithm. We just represent it on the chart, the graphical interface. We represent it as what looks like a moving average, simply because that's what everybody's used to looking at. But what I look at when you get these types of crossovers with this cyan momentum algo crossing through this very slow-moving time price algo, is we look at the angle of attack. That's pretty sharp. Make that a little bit zoomed in. You can see that. Now, where do we go from here? If you pay attention to options gamma, and let's be realistic. Options market makers, options gamma have been, I don't want to say responsible, but they played a big part in these crazy swings like we saw the middle of the week where ES went down to 31.81-ish, and then we got that massive move back up. So the 6 p.m. Globex ended the day right around 32.26 to 32.30, and then the key support that day was 32.26. When that broke, that was actually our price acceleration pivot that day, and when that broke, you had that very fast move down into 31.81, and then it came right back. Now, according to the folks that monitor options gamma every day, the way it's laid out is you've got sort of like cushions or bumpers between 3,300 and 3,250, and gamma should keep ES within that range. I don't believe that's going to happen. I don't believe this is going to hold at 3,250. And one of the reasons I say that, and I'm going to go completely off script here, because everything that I do is based on mathematical algorithms. I don't do fundamentals or projections or conjecture, but I'm going to make an exception right here, because with ES up here at 32.87, who wants to get long who isn't long already? I mean, think about that. Everybody who wants to be long is long. Everybody's all in. Everybody's in the pool, okay? So, are you going to get dip buyers down here in 32.50, 32.60? Of course. And they're going to take that trade and probably take their profit somewhere up here on a bounce. But I don't believe that you're going to get a lot of people who are going to want to load the boat long in this area if they're not long already. And that's going to be a problem. Now gamma has the potential to flip violently, at least as of this date, around 31.98. Are we going to go directly down there? No. But every swing high of any significance has to start somewhere. So we didn't get anything violent on Friday. It was orderly. There wasn't much bid. But this is how retracements start. And because of the gamma situation, because of geopolitical events, because, in my opinion, and this is just my opinion, I think you're probably going to get a little bit of pause in liquidity here. Not for a long period of time, but there was a little pause in liquidity on Friday, and there was no bid. So we're not anywhere near, in my opinion, the end of the liquidity injections. But they can't take the liquidity straight up on a line, although it's looking real close to it. So I believe we're going to get some type of pullback here. I think over the next week or so, I don't believe this 32.50 is going to hold for now. Doesn't mean that we can't break it and come back up and ES recapture 32.50. But I think it's just a little bit too pat, a little bit too cute to think that ES at these levels is going to stay up here in historically overbought zones between 3,300 and 3,250 just because options gamma says it's going to. I'll take the other side of that. Sorry. So that's what we're looking at going into this week. We continue to print the daily algo bull bear pivot that we post way up here at the top of the range. On Friday, it was 32.80, and that was the other thing. That was the third part of the triple threat. You've got right at between 32.80 and 32.82. You have the daily bull bear, and this is all time based. We put this out about 2 hours before the open. It's a proprietary algorithm that gives us one single bull bear pivot for the day, and we don't trade solely off that. That's just another tool in our toolbox. But I found it extremely interesting, and do not believe it's coincidental that you had on Friday the daily bull bear pivot at 32.20.18. You had our proprietary time-based algo go short 32.82. You had the upper extension number 3 very, very overbought at 32.81. And you had the regression time price regression line from way back in June that's coming in here at the same price. That's way too much stuff from a mathematical perspective to be coincidence. So let's see what happens this week. Thank you so much for your time being here. If you haven't been to our website yet, mercurysignals.com. We're running 62% off our regular prescription rates. There you go, subscription rates. That'll be for a little longer. It's not going to be extended very much longer, I can tell you that. But we give you a 7-day free trial. We bill weekly, not monthly. You can quit anytime you want. Many of our subscribers made enough on Friday to pay for their subscription for quite a long time. Many of our subscribers this past week made enough to pay for their subscription for a very long time. This algo tends not to flip during the day. Since the day after Christmas, it's been in one trade from bell to bell every day. The exception to that was New Year's Eve, where it was short at the opening bell. We went down about 20 some odd handles. And then in the early afternoon, it flipped long, and that ramp of another 20 some odd handles up, it caught that. But when this locks into a trade, because it's based on time, these blips up in price do not shake it out. And one quick example before we end the video. So the algo got short 32.82 a little bit after 8 a.m. Eastern time on Friday. You had this move down into the open 32.74. Then you got a quick move back up to 32.83. You had a 9-handle move up, and this algo did not flinch. Didn't even come close to getting out. Now, if this algo was built on price, as most of them are, it would have flipped you long, and then you would have got torched because there was no long. There was no long trade at all, period, on Friday, January 10th. It was short from bell to bell, and with our proprietary profit capture pivots, it gives our traders an opportunity throughout the day to take profits into these moves down. So thank you so much for being here. We'll have more updates tomorrow. Please check out our website if you haven't done so already at mercurysignals.com. Thank you for your time. God bless you. God bless your family, and we hope to see you soon.